Welcome and thank you for clicking on my video. Today we do have another closing below the 200 outside of the monthly expected move, outside of the weekly expected move, and everyone's going, is this thing gonna bounce? Is this thing gonna bounce? Is this thing gonna turn back down? We're going to cover some of that today. We're going to be paying attention to those shorter time frames and looking into some new updated daily expected moves and figuring out, hey, what do we need to be paying attention to tomorrow? Because it looks like we have some signals out there that say we are at a dire point right now where if the market is not able to get some kind of bounce, some kind of relief here, we are at risk of some kind of big drop, some kind of little pop and big drop. So we will be paying attention to that, and we're going to get right into it starting off right now. Okay, so to keep it concise here, I mean, it looks like a lot of things want to bounce, and we're mainly going to be talking about this 30-minute chart. But why are we talking about upside? And real quick, just to show you, in case you're new here, we've been talking about this stuff a lot. We've been talking about potential bounces. We talked about the bounce that actually failed in this area and how we actually did hold some signals for the SPY. But, you know, stocks are really showing they really want to see some kind of upside move, whether that's relief rally or full recovery. We'll find out as it potentially happens. But for the stocks right now, I mean, if you just click through a lot of these, Tesla divergence on the 2-hour, we got Amazon divergence on the 2-hour, we got Nvidia 2-hour divergence on both the MACD and RSI. Like, you have divergence almost everywhere. AMD showing a potential for double bottom, Meta showing divergence on the RSI, holding a triple divergence, Microsoft with the divergence on the MACD and RSI at the same time, Google with, and the list goes on and on. So what do we need to be paying attention to? Well, if we're even going to get that 2-hour move, but for tomorrow, we need to be paying attention to this 30-minute chart. As far as the failure of the SPY goes, and a failure of most likely a lot of stocks, most likely will show up for the SPY. So if we're going to see a lot of those stocks fail these moves, we're going to be looking at 30-minute charts, understanding we are still below a 5-day moving average, which we would like to take back. But there's something interesting here, and the obvious thing is this is the first point where we're watching for rejection, right? If you watched the video from yesterday, if you'd like to go check it out, it pretty much is planning out how we treat this kind of behavior right now. It's a great video to go watch. Whenever I make some kind of video about bullishness, it doesn't do very well. That's unfortunate, but it is very good. It is a very good video to check out because it will show you how rejections are going to happen. And this is one of the things we were talking about. Now, we didn't get that extended move to a daily expected move, but we are remaining in this area and allowing the 30-minute to get up to that center line, which if it gets up to that center line and crosses down, this is kind of where we go, okay, now we have a point to pay attention to at 551.41 for the SPY, right? Our daily expected downside move, 566.34 to the upside. So if we get some kind of downward move to start, don't think it's all over unless this never curls back up, right? If we want to see that reversal signal, this going down from here would be a bad thing. But if it's able to curl back up, it would be divergence, and that would say that the 2-hour has a high likelihood to get a better bounce now. And maybe you even see that show up very lightly on the 2-hour chart. That would be nice. So something we're paying attention to is rejection here, but we do get data in the morning, right? That's overall the bearish thing and how we would overall look into that, right? But look at this. Look at your daily expected moves. They've actually shrunk a little bit here. Now, they are still pretty significant daily expected moves, but we were looking for one of those times where the implied volatility dropped off a little bit, and we have seen it drop off a little bit right now. Maybe that's going to drop off a little bit more tomorrow. We'll see. But the reason for that is something that needs to most likely happen for the SPY to see a solid upside move is you're going to need to see something unexpected. And when these are really, really spread out, these red lines, it's very hard to see something unexpected because you have so much being priced in. But as they start to shrink, we can look into it and go, hey, the market might be about to do something a little bit crazy. And so we're paying attention to that. The 2-hour is crossed up. Ultimately, we have divergence on the RSI. We still know that, and this is why that previous video is important, the 2-hour failure, we can still pay attention to that. But if this daily chart's able to curl up, and I think you got to see something crazy, it is nice because now you're outside of the weekly, you were outside of the monthly, you're coming back into the weekly, and you're seeing these shrink, which means something crazy can take place. Now, for the Qs, we're going to be looking at a similar thing, right? We might have some key levels here to pay attention to, and you're going to notice, hey, they look pretty wide, right? But this is actually a lot smaller than what we've been dealing with lately. And you can see once again, the 30-minute here for the Qs actually could make a higher low. It's slightly positive, but we still want to be very open to a divergence, right? But we want to make sure these things are confirming before making a decision, because this could never confirm back and end up curling down and going down, down, down. You are at a risky moment, and you have some big data tomorrow, which will be the PPI. CPI seemed like people did kind of like that news, but you see the hesitancy, right? We see the hesitancy. So what we were looking for was maybe this is a little piece of good, and maybe we need a little more good to make people actually want to make a decision here. So if the 30-minute crosses down, that would be bad. We'd be looking for that level of about 469.28. If this 30-minute is going to see a good reaction, then we're looking for that 484.56 to the upside. And I think you kind of want to see something crazy as these are starting to shrink, and maybe we need a couple more days for that. We're still aware of the 2-hour rejection that can come, and if you need to see those things, we have that video from yesterday. That would be very, very helpful to break all these things down. So for tomorrow, we really just want to be seeing, do we see the divergence show up and see that curl up? We will be live in the morning to see what's going on in the morning, to see what is the most probable thing, but it pretty much is. If this MACD crosses, you're very likely to test the low and go make a new one with a little bit of probabilities of making a higher low, and that's where we pay attention to the daily expected move. So the environment you're in right now, I think it is a little bit dependent on the data, but we could get those fake out moves, right? Sometimes the market does bottom on bad news, right? If the news isn't bad enough, people are expecting it, everything's priced in, you can still see upside moves. So the main takeaway from the SPY and the Qs here will be, if the 30-minute does rotate down, we're looking for 30-minute divergence. If that rotates down and we don't see that 30-minute divergence confirm, then there is nothing to do here. There is nothing to do here except for probably watch stocks see some kind of move to the downside, right? See lower prices. So we want to make sure that we're seeing clear signals and having 3 to 5 reasons to take a trade, which is something that we go over a lot in our courses. But overall, it's just, hey, if the 30-minute curls down, this thing is failing again at the 5-day moving average. And we can see the failures at the 5-day moving average have been a little bit rough. So I would be cautious with it if this turned down, but hopefully we see something crazy and curl up a daily chart. This is where I wanted to talk about volatility. To give you the full breakdown of volatility, why we were saying that was going to subside, well, right away, our 30-minute, right? The 30-minute double top. We see that very plainly on your MACD and your RSI and SPY giving a few things there. But we will notice that the 2-hour is in that dangerous level. And this is why you want to be very cautious if those 30-minute MACDs do roll down and they don't curl back up, right? If they curl down, we want to treat it seriously, because if they don't curl back up, you might be curling back up this 2-hour for volatility, and that thing could start to go sky high. I'm not necessarily leaning towards it because you do have triple divergence on the RSI for the 2-hour, but I am aware that this is positive. I'm aware that this can happen, and this is something that could cause my potential calls to go wrong, right? This could make my trade go wrong, and that's why I'm paying close attention to it. So I want to be very clear with this right now and just say, okay, the 30-minute has divergence, the 2-hour can see that reaction up, but if the daily chart starts to confirm down, we might have created that base, maybe even today, or even early tomorrow, right? We could see some kind of fake out in the morning, but if this daily chart does curl down for volatility, I think it's at least going for a test of the 200. I would say somewhere in this area with the level of 20 taken into consideration in this little box would be where we want to get to, and this is where we will pay attention to those lower highs. Once again, if you want to understand what lower high we're paying attention to, watch yesterday's video. It will really help you out. But for volatility, we can see that it was down by 10%. Okay, so it's down by 10%. So this does tell us that there might be some probabilities of, hey, in the next 2 trading sessions, we could see a down day, right? So now that volatility is saying, hey, in the next 2 trading sessions, we get, and by the way, volatility has been getting it very right with these 10% moves and 85% chances. So if volatility is going to get some kind of update and the SPY is going to get a down day, wouldn't that be interesting if that down day was creating some kind of divergence that then turns to the upside and you end up being down at the end of the day, but the next day you actually see this thing reverse around with some more data. So we'll be paying attention to it. There's a lot of things that we need to react to, and that's why trading like water and making sure you have your plan for the trade is going to be very important. So I think the main things and the main takeaway here is, hey, if something bad's going to happen and it's going to be a trick, well, then that's probably going to be a 30-minute divergence. If something good's going to happen, man, I think you're hoping for just some kind of gap up, some kind of very bullish move to see something unexpected as the daily expected moves are shrinking. And we will talk further about this and look for if that 2 hour is failing later on, but this is what we have in front of us right now. So thank you guys so much for watching this video. I hope it was helpful in some way, but right now we will be watching the 30-minute chart in the morning during our live show to discuss whether or not this signal is confirming. We got to make sure to react to the data in case that thing comes out good or bad, right? We want to have a plan for either scenario, and tomorrow's data would be the PPI. We got a light CPI today. Let's see if we get a light PPI tomorrow. All right, guys, have a great day. I hope you guys have all the luck in the world with your trades the rest of the week, and peace out.